Okay, good afternoon, good morning, and good evening from the Asian Development Bank. I know many of you are joining from all over the world, so thank you very much for your time and welcome to this virtual dialogues on resilient infrastructure. My name is Benita Ainabe, and I'm a financial sector specialist with ADB Southeast Asia Department. Our dialogue for today is on leveraging insurance for resilient infrastructure. Insurance can play an important role in influencing behavior, lowering the economic impact from disaster events, and unlocking private sector financing for sustainable infrastructure investments and more effective disaster response and reconstruction. Today's dialogue will provide an opportunity for us to unpack the role of insurance and to discuss the value proposition of the insurance industry for quality infrastructure, looking at how insurance can de-risk infrastructure investments and exploring innovative public-private partnerships. We have a great lineup of experts and practitioners, and we very much look forward to their insights. So before we get started, allow me to share the house rules. Okay, please remain on mute throughout the presentations. Your questions and comments are very welcome, so please use the chat bar or the Q&A box. Later on in the session, we will split into breakout rooms to look at the topics in more detail. And once the breakout rooms are opened, you will receive a join a breakout room notification at the bottom toolbar to join your preferred group. And finally, on the house rules, just to note that this webinar is being recorded and the video will be shared on the event website, along with the presentations and a summary in the next day or so. So before we proceed further, we have a poll and we would like to get your views. So the question is, hope the question comes up soon. What do you think is the most significant challenge for insurers to invest in climate and disaster resilient infrastructure? There are 5 options. The first one is limited pipeline of bankable projects qualifying as climate and or disaster resilient. The second is lack of policy and regulatory incentives. The third is difficulty in pricing physical climate risks into investment decision making. The fourth, barriers to entering markets. And the fifth is other. Please select one that represents your strongest views, and you have 1 minute to answer. I can see that you started. We'll just give some more time for everyone. Interesting. Now, I can see that option 3, difficulty in pricing physical climate risks into investment decision making is the most popular option. The next is limited pipeline of bankable projects qualifying as climate and or disaster resilient. So that's really interesting, and would actually like to delve into these 2 areas deeper when we break out into the session. But just to note that this is an interesting question. It basically highlights the role that insurers can play both as risk takers, so absorbing risks on the liability side of their balance sheets, which is basically the insurance business model as we know it, and as well as investors. So on the asset side, investors, they make investments to ensure that the tenor of the assets match their liabilities. So in the markets, insurance companies are typically long-term investors in infrastructure financing instruments, which aligns with the steady cash flow over the life of these projects. So this comprises the construction phase and then commercial operations, and that's typically linked to long-term concessions. So this in turn helps the insurers to avoid an asset liability mismatch on their balance sheet. And it's a win-win situation for the investors and the project sponsors. So thank you very much again for your participation. Now on to the main part of our dialogue. To get us started and to frame today's session, it's my pleasure to invite Ms. Ekoswehi Iyahen to set the scene. Ekoswehi is the Secretary General of the Insurance Development Forum, IDF. The IDF is a public-private partnership led by the insurance industry and supported by the World Bank and the United Nations, aiming to enhance the use of insurance to build greater resilience against disasters and to help achieve the United Nations Global 2030 agenda. Ekoswehi has extensive experience working with governments, international development agencies, private sector entities, and academic institutions on public financial management and strengthening risk management and financing systems and the role of insurance. She's been directly involved in establishing and operationalizing a number of pioneering initiatives, including regional risk pools in Africa through the Africa Risk Capacity, the Caribbean Catastrophe Risk Insurance Facility, and the structuring of a novel tripartite agreement between the IDF, the United Nations Development Programme, UNDP, and the German Ministry of Economic Cooperation and Development, BMZ, to increase insurance protection in 20 climate-exposed countries. Ekoswehi, the floor is yours.
Thank you, Benita, for that kind introduction and really the invitation to be part of this important meeting today. So very happy to be here. And also the opportunity to share a bit about the topic, which I think is extremely timely at this point, and also a bit about the IDF and offer some reflections on the theme. So thank you for Faisal for sharing the presentation. We can go on to the next slide. As was mentioned by Benita, just by way of introduction, the Insurance Development Forum is a public-private partnership led by the insurance industry, but also co-chaired with the World Bank and the UN. But we do have a vast and a wide group of membership. Also, actually, a number of representatives from the Asian Development Bank being involved within the IDF. Our aim, as was mentioned by Benita, is to optimize and extend the use of insurance and related risk management capabilities to build greater resilience for people, businesses, communities, public institutions that are vulnerable to disasters and their associated economic shocks. For us, there are 5 areas that we focus on in terms of what we believe that our coalition as a public-private partnership can contribute to when we think about resilience and the role of insurance. These being risk modeling, understanding the risks that we face in a much more comprehensive and deeper manner, law, regulation, and resilience policies, often because insurance exists within a regulatory regime, and the need to work through some of the issues that also influence how markets are able to develop. We also have 2 working groups that are very much focused on driving solutions. And I think that this is quite pertinent for the discussions that we're going to be having here today, because what we see in terms of the risks that we're faced with as a global community, countries, etc., is that there are new risks, new challenges. So we have to think about new solutions. And we do that through 2 working groups, one that is focused on driving solutions at the sovereign level or with humanitarian actors, and then another focused more at the inclusive insurance level. And then finally, we focus also on investments and really reflecting what was mentioned earlier in terms of thinking about insurers, not only in terms of their underwriting role, but also as investors, and how can we increase the amount of investments, particularly in emerging economies with a focus on infrastructure. And so we have 200 experts working across these working groups, driving conversations with governments, businesses, etc., around the kinds of solutions that are needed. Thank you. Next slide. So getting to the topic that we're all here, I think today to reflect on and to really actively discuss is from the IDF's perspective, we focus on this issue of the protection gap, which is the fact that we do have these disasters occurring year in, year out all the time. And there's a real challenge because oftentimes when you have these significant losses, most of those losses are actually not insured. And what that translates to is a direct impact in terms of governments, and also individuals having to absorb that shock. And so these are just some stats to reflect the kind or the scale or the magnitude of the protection gap that we see globally. And this is from a Lloyd's report reflecting that the size of the global insurance protection gap in emerging economies accounts for 160 billion. But we also know that this exists in a context where for many developing countries, insurance penetration rates are extremely low. So usually between 1 to 3% on average. And when you compare that to most developed countries, we are talking about 30%, 40, 50%, etc. Right? And another context, another element that I think is also important for the reflections that we want to have here today is that when we look at the amount of losses that we are experiencing as a global community, these figures continue to rise. And again, the estimated figure loss to extreme natural disaster events over the past 40 years being 4 trillion US dollars. So the protection gap is a problem in and of itself, but we're also seeing that this is an issue that is not only in developed markets, but also not only in developing markets, but also very much in developed markets. And at the heart of that is the fact that oftentimes those who need protection are often the ones that don't have access to insurance and are uninsured. Next slide, please. I thought it would be important to include this slide because just to offer some perspectives when we reflect on the Asia Pacific region. This is reflecting some work that was done by Allianz Global Corporate and Specialty to assess the vulnerability of people to natural hazards. And through that body of work, it was found that in 2005, for example, when we look at coastal flooding exposure in Asia, one Asian city was in the top 10 of cities exposed to coastal flooding. By 2070, it is estimated that 8 Asian cities will be in the top 10 in terms of exposure to coastal flooding. And this is quite significant because it's also again occurring against the backdrop where we're seeing the exposure being driven by socioeconomic growth, urbanization, population growth. So there's a real challenge here in terms of increasing exposure, particularly in the Asia Pacific region. Next slide. This again is important because it also means that we are looking at greater exposure in terms of infrastructure. Given the theme of the conversations that we're having here, we're going to have here today over the next hour, infrastructure is obviously an essential ingredient when we think about the modern economy. It impacts positively growth, output, productivity, etc. It also underpins the sustainable development goals. And it also, the investments that many of our governments are making in investments in infrastructure is quite significant and obviously is part of driving the development agenda. But what we also see is that there is a need to proactively think about how do we protect these investments that we're making in terms of infrastructure. And disasters obviously pose a significant threat in terms of the investments that we're making into infrastructure. Next slide. And again, just to highlight the importance of and the relevance of insurance is the fact that when we do have these disasters occurring, there's often sometimes in many contexts, a dependence on the international humanitarian system to help to intervene and support recovery efforts. But we also know that that system is quite challenged. There is a global humanitarian funding gap. Funding requirements stood, I think this is for the 2019, was at 29.7 billion. The funding received was only 15.9 billion. So there's a real gap in terms of coverage there. But that also exists in terms of a mismatch between how governments think about preparedness and actually structuring financing to effect response when these events occur. So generally what we see in the disaster management context is poor preparedness and planning, underinvestments in data and systems for response, underinvestments in risk reduction and adaptation. Oftentimes response and how we treat to recovery is often politicized and tactical, which can impede the speed at which we recover. It's often very poorly coordinated, and there's also limited learning. And when we reflect on the experiences of COVID, what we see is that just 2% of global funding was planned and arranged in advance. So I think that is symptomatic of the system and the fact that there is a need for more proactive thinking about financing recovery and reconstruction when these events occur. Next slide, please. And so the next slide is really to offer some reflections on the important role of insurance. So when we think about resilience, I think that there are a number of pillars that we have to invest in. Insurance can be an important avenue through unpacking the kinds of risks that we actually face and understanding them in a very practical manner. And that's important because it also is what can inform the investments and decisions that governments need to make in terms of risk reduction, risk transfer, preventative measures, etc. But it's also about the discipline, and it also offers an opportunity, I believe, to introduce more discipline into the process around recovery and financing recovery, and introducing more fast evidence-based decision-making processes to tie to the response and recovery efforts. But fundamentally, I think that the value proposition is also about providing greater financing when these events occur. And again, this ties to the original points that I mentioned, given the low insurance penetration rates that we see in many of our countries. So there are a number of layers and avenues through which insurance can play an important role. And we are seeing this emerging quite significantly in terms of the global dialogue that is happening around resilience and climate change, and just how countries need to reflect on their development agenda going forward. And I'm sure most of you in this meeting would have seen the communique from the G7, also the vulnerable group of 20 countries, really reflecting the need for greater investments in ex-ante instruments, including insurance, to help governments deepen their resilience, in general. Next slide. But these reflections that we would have seen in the G7 and the different global declarations also reflects, I think, the desire in many countries to actually explore different types of innovative solutions. And I know that there are a number of speakers on this call that will share insights into what we are seeing evolving in this space. But again, this slide is to reflect some of these innovations, if it is in Africa, Latin America, the Caribbean, but also very much in Asia, when we think about some of the innovations that have occurred in India, Thailand, Bangladesh around insurance solutions. So just to conclude, and again, bringing it back to the topic, I think that, next slide, I think that there are a number of avenues where insurance can play a tremendous role, as I mentioned earlier. Where we are existing in a world where there are new challenges, new risks, which are complex and interrelated. There's a demand for better risk management across the globe by citizens, individuals, governments, etc. There's also a need to improve our public financial management systems and manage, when we think about climate change, transition risks, and the opportunities that also unlocks. So insurance has a tremendous role, I believe, in helping us to think through each of these elements. It's about, from my perspective, I think that it's an opportunity for society, for those within our countries that are responsible for public financial management, if we're in businesses, etc., to think about what are the protection systems and the risk management systems that are required for the future. And how can I leverage the tools and the breadth of what the insurance industry offers to help me to shape and construct what that looks like. And so there are a number of elements that are, I think, moving parts within this process. We're seeing quite a bit of innovation within the insurance industry around risk, and really treating to the developments around the catastrophe modeling space and how we bring in more of the climate modeling elements into that to help governments improve their understanding and plan better. But it's also an opportunity to think about the regulatory environment. How do we improve the regulatory environment to allow for insurance to play a much bigger and better role in terms of the resilience agenda? And then also thinking about new products that are needed. And as I mentioned earlier, we're facing new risks, complex risks. So it also means that there is scope for innovation. And this innovation has to be driven through public-private partnerships. And then, so I would just conclude and say that from the work that we are seeing in terms of public-private partnership, there's a tremendous appetite that is emerging in terms of opportunities for insurers to collaborate with public sector entities to drive this agenda. And I hope that over the next few hours, we'll be able to unpack some of these ideas that are emerging, but also to get into some of the challenges that we face in terms of the limitations also that insurance has in terms of the areas that we are, of areas of concern that we are often have to contend with. And so in conclusion, just the next slide, after that, you can find more information on the work that we're doing in the IDF on our website, but there are also a number of reports that we have issued related to this theme. And I think one that is particularly relevant for the discussion this afternoon is our practical guide to insuring public assets, because it's very much linked to the topic of infrastructure and how do we make our infrastructure more resilient. So I'm looking forward to the discussion and hearing more from the participants and also the other speakers. But I hope this gives you a sense of the reflections of what is happening in the broader insurance industry and the collaboration that we are undertaking in terms of deepening our partnerships with the public sector. So thank you again, Benita and team, for the invitation to be part of this.
Excellent. Thank you very much, Ekoswehi, for your invaluable insight into the insurance protection gap in developing and developed markets alike, investments in infrastructure and their alignment with the SDGs, and the role of insurance in financing disaster response and recovery, in particular, building risk management. So lots to think about there. So I hope for those of you that will join Ekoswehi's group, you have you're thinking about lots to discuss with her. So we'll now move on to the burst talks, where we'll hear from the experts on leveraging insurance for resilient infrastructure in practice. Please feel free to post your questions in the chat bar. The first burst talk on partnerships for coral reef finance and insurance in Asia and the Pacific will be made by Mr. Arunkumar Abraham. Arunkumar is an ADB and Global Environment Facility, GEF, Senior Environment Specialist. He's a consultant with responsibility for to secure and blend financial resources from the GEF with ADB's technical assistance, loans, and investments. He has considerable experience in financing natural capital management as an owner and director of a Singapore-based boutique consulting firm called Bio Conservation Ventures. He's also been chief of party of the USAID supported environmental governance program, EcoGov, in the Philippines, as well as taking on senior executive roles in coastal and marine management, sustainable fisheries, and private enterprise development programs across Southeast and East Asia. Arunkumar, the floor is yours.
Great, thank you very much, Benita, and hello to everybody. Thank you for joining this session. I'm going to talk a little bit about ensuring resilient infrastructure, but in this case, natural infrastructure, or ensuring natural capital assets, more specifically coral reef ecosystems. I'm going to put up a slide here, which I hope you can see. Good. Coral reef ecosystems, why are they important? A lot of you who live in Asia and the Pacific would already know this. Coral reefs provide a wide range of important ecosystem services. A good, healthy reef has provisioning services in the sense that it can provide food in terms of fish and fish products. It has opportunity to generate income primarily through tourism. And they are the protective services. Coral reefs can buffer up to 97% of wave energy. This bundle of ecosystem services from coral reefs has estimated value of about $2.1 million per hectare per year. So this covers the provision of raw materials, maintaining genetic diversity, protection from natural hazards, as well as recreation, economic opportunities, and aesthetic enjoyment through sustainable tourism. Now, in particular, the model we're going to talk about is referred to as parametric insurance for nature. Parametric insurance is a type of product that provides a pre-agreed amount of payout based on the occurrence and intensity of a hazard event. So these serve as proxies for impact and loss, as opposed to the standard or traditional approach of indemnification insurance. the premise is that the payout would occur quickly, sometimes between 10 to 20 days after an event. The model that we have been looking at, the Pioneer model, is based in Quintana Roo province of Mexico, which covers a long stretch of beachfront area that is popular in Mexico and the rest of the Caribbean. It's part of a larger Mesoamerican reef system. The product that they had developed there would pay out 40% of the total when wind speeds reach 100 to 110 knots within a designated polygon or area, and in full payment when the wind speeds reach up to 160 knots. So in Quintana Roo, the insurance, a trust fund was established, and the trust fund becomes the beneficiary for the insurance, with the requirement to only use the payout funds for restoration and rehabilitation of the reef. 50% of the payout for restoration and 50% of the payout for rehabilitation. Now, that model became a proof of concept in November last year, 2020, when a hurricane, a Category 5 hurricane, hit the area, and it worked very well. There were reef brigades that swam out to the reef immediately after the event and started patching up the corals to limit the long-term damage. And the payout came, I think, in the order of about $825,000 within the 20-day period that was stipulated. It became a front page story on the New York Times. Now, this didn't happen by accident or didn't happen quickly. It took probably 5 or 6 years for the conservation finance organization called the Nature Conservancy, or TNC, which many of you know, to work with the local government and all the stakeholders to do all the technical assistance, training, capacity development, knowledge required to establish the insurance product. But it showed that it can be done. And a second insurance product was issued, I think, a couple of months ago to cover the same, the expanded stretch of area to include 3 other Caribbean countries. Now, what we're trying to do is to adapt, replicate, maybe scale up this particular model in Asia and the Pacific. It hasn't been done before, so we're actually trying something new. We are fortunate to have received a small grant from the Global Environment Facility, which will be combined with ADB investments to begin this initiative. We are looking at working with a number of partners to create a kind of a multi-partner coalition or stakeholder group that will be able to advance this. So right now we have as our partner, our core partner, the Nature Conservancy, through their US-based team. We're also in collaboration with the Ocean Risk and Resilience Action Alliance, which consists of public and private sector entities, which include the insurance and reinsurance industry. We're working with national governments in 3 countries right now, the Philippines, Indonesia, and Solomon Islands, and we're hoping to bring Fiji on board quite soon. We're also working with local governments. This is very important to be able to, because it's a very site-specific work. So we are working with municipal, city, and provincial governments. And in one case, in Palawan, Philippines, a special entity called the Palawan Council for Sustainable Development. Now, what we have done up to now is some initial baseline assessments and identification of candidate sites. And what is required is a suite of interventions in each of the countries. So comprehensive assessments of high value sites, those sites that are important for ecotourism or fisheries or other types of values. We have to do assessments of socioeconomic and demographic information, the biophysical characteristics of the coral reefs, the climate conditions, the typical wind speeds, sea surface temperatures, rate of sea level rise, wave height. So there's a whole bunch of parameters that we need to look at. We're also doing stakeholder mapping and engagement in all of these communities. So it's not just the public sector, but civil society and NGOs, and importantly, the private sector industries that are affected or rely on coral reef ecosystems. We're doing policy, regulatory, legislative analysis at each of the areas. This would need to be informed and guided by loss and damage assessments, ecosystem valuation studies, and a number of other types of research. We're hoping to develop a guidebook or a playbook on post-storm response and capacity that will be specific to each of the areas. And this will be based on the work that TNC has done in Mexico and other areas. I think they're doing it now in Florida and Hawaii. And importantly, we need to make a business case for coral reef insurance. We need to establish some kind of sustainable financing mechanism. In many of the cases, this would be a trust fund or other special purpose vehicle that would be able to do two things. One of them is obviously receive income and be able to sustain the maintenance and operations of the coral reef ecosystems. They need to be sustained at an optimal level to become an insurable asset. And then also to be able to eventually pay out premiums on a regular basis for the insurance product that's developed. And then finally, the last step is really to work with the insurance industry to design the parametric insurance product. And I think it'll be different in every country. So as you see here on the far left, in Indonesia, we have 7 sites that have been scoped initially. And we are going to continue to work and narrow that down to just 1 or 2 sites that have high value. We are helped considerably by an NGO in Indonesia, Yayasan Konservasi Alam Nusantara, or YAKAN, which is an associate of TNC Global. We are working in Palawan in 2 sites that we've identified in El Nido and Coron, both high value sites for tourism and fisheries. And this work in Philippines will be aligned with a large loan from ADB to the Department of Tourism and Tourism Investment Economic Zone Authority, or TIEZA, for about $100 million. So the ADB loan will invest in infrastructure and also some work towards sustainable financing mechanism, and we will use the JEF funds to provide the additionality for towards the insurance. In Solomon Islands, we've identified one area, which is the Arnavons Community Marine Park. It's probably their best managed marine protected area in the country, and use that as a showcase or a demonstration for other protected areas in the country as there is a resurgence in tourism after the COVID pandemic ends, if and when it ends. And then we have in Fiji 5 sites identified, all of them very high value. And again, the nature of the site can be different. It doesn't have to be tourism and fisheries value, but in a couple of these sites, we have coral reefs protecting central business districts, physical assets in Makassar, for example, Indonesia, and Suva in Fiji. And so as we will move forward, we will try and bring on more partners and try and do the capacity development, technical assistance that's required to be able to advance these initiatives in each of the project countries. We're hoping that eventually this will be replicable and scalable, not only within the project countries, for example, in Philippines, along the eastern seaboard, they're heavily exposed to typhoons. And so we have parallel work going on with other partners. I think UNDP is doing some work there. There are other countries in the region that are interested, for example, Vietnam, that has coral reef ecosystems, and they're very interested in looking at this model. And Indonesia, the scalable potential is quite high. We've only identified sites already, but there are considerable more. So I'll end at that, and I will look forward to a interesting and lively discussion during the breakout session. Thank you very much.
Great. Many thanks, Arun Kumar, for the insightful discussion on the importance of coral reef ecosystems, parametric insurance for nature and its merits in providing quick payouts. And in the Mexico case, that was interesting to see the split into rehabilitation and restoration, and also the capacity building work on coral reef insurance in the Philippines and Indonesia. Interesting 3D background you have there of the beach, by the way. It's very fitting. Anyway, just to say that we're seeing a lot of questions coming through. If everyone could just make a note of any questions you might have, which will be discussed in the breakout session. Now on to the second burst talk. This talk on de-risking infrastructure investments will be made by Mr. Christian Vetli from Swiss Re. Christian is head of infrastructure solutions and part of the Swiss Re Public Sector Solutions. This is the PSS team. The PSS team is dedicated to helping government agencies, as well as international organizations at all levels to strengthen their resilience strategies. In Christian's role, he works with financial sponsors, including governments, NGOs, multilaterals, investors, and financiers, as well as contractors and intermediaries to ensure the resilience of their infrastructure projects. Prior to this, Christian was global head of innovative risk solutions at Swiss Re Corporate Solutions, responsible for new product development and the marketing, structuring, and underwriting of bespoke risk and capital management solutions. Christian, the floor is yours.
Thank you very much for the introduction, Benita. It's a pleasure and honor to be actually invited to talk about the role of insurance, the insurance industry plays to enable resilient infrastructure. And I have to say, just a side remark, I was actually part of the core team who invented, if you want, the Quintana Roo coral reef cover at the time. So that was in my new old role. My name is Christian Wörtli. I'm head now of infrastructure solutions at Swiss Re, and I'm actually based in Zurich. So for those who don't know Swiss Re, we are one of the largest global reinsurance company. Let me quickly share my slides. If I put that, give me a second. Good. Can you see the slides?
No, we can't.
More visible.
We can now.
Good. Sorry about that. We are one of the largest reinsurance company in the world, and our mission statement is really to make the world more resilient. It was actually interesting to hear before about the protection gap. So we also aim to close that protection gap as an industry, and particularly as Swiss Re. To give you some figures, in 2020, we actually experienced about 175 billion of nat cat losses around the world, and only 76 billion were actually insured. So that shows that a large part of the world actually doesn't have insurance and therefore really suffers after large losses. So if you think about reinsurance company, think about us as being a shock absorber if large event happens. So our mission is really
Christian,
yeah.
Apologies to sorry for interrupting. Can you please go to presentation mode, because we can't see the slide. It's not legible. Yeah. Presentation. So yeah, that one. Thank you very much.
Good. Sorry. Our mission is really to be a shock absorber. Whenever big losses happen, we are there to pick up those losses and help people and companies to get back to their feet. Now, if we speak about the role that insurance plays in respect of infrastructure, I want to point out three areas. One as an investor, secondly as a risk taker, and then in respect of risk insights. So first of all, why is infrastructure important? The Global Infrastructure Hub actually forecasts that by 2040, 94 trillion of US dollars will be spent on infrastructure projects. However, out of those 94 trillion, they also identified 15 trillion of funding gap. So the challenge really is how we can close that funding gap, and in particular, how can we unlock private capital that goes into those projects. If you look at the insurance industry, the insurance industry has around 30 trillion US dollar asset under management. And if you think about it, I mean, the insurance industry has long-term liabilities, and in theory, at least, these liabilities would be a perfect match for a long-term investment, which could be infrastructure, because infrastructure by definition has a long time horizon. However, sometimes the money at the moment doesn't really flow into projects, and I think that's probably enough for another webinar. But one of the challenges really is how can we attract more private capital for infrastructure projects. Now, the main role, however, for an insurance company is as a risk taker. And there I have to say, we can have the most transformative role in enabling infrastructure investment, because we can actually help a project to de-risk and therefore make them more attractive for investors, and therefore then have more flow or unlock private capital flowing into those projects. So we actually have the ability, if we want, to steer funds and capacity into project. On the flip side, however, you can also argue that if projects, for whatever reasons, are not insurable anymore, and a good example is, for instance, the insurance industry exiting, for example, the coal business. So that also creates incentive for the industry to switch into assets that are actually supported by insurance. And therefore, we also have a role to play to enable, if you want, more resilient infrastructure projects. Now, the last role I want to highlight is really the role as a providing risk insights. So for examples, insurers are definitely concerned about new emerging risks. We look into new technologies, and a big topic at the moment is also the role that climate change is going to play. So we as an industry, we provide research reports. For instance, Swiss Re provides their Sigma reports. We have a report called Sonar, which actually looks at future risks that come up. And these risk insights also then provide some focus areas for the industry and capital to focus on. What is very important, though, is that insurance actually puts a price tag on the risks. So I quickly want to talk about some examples where insurance plays a big role in enabling projects. The example I choose here is actually one that is in the public domain. It's an example that has been financed by the World Bank Group. It's a hydro plant project in Cameroon. there the real issue is that only about 60% of the population of Cameroon have actually access to electricity. And the aim was to electrificate, if you want, the country, and to give more people access to power. The project is called Nachtigall. It's based on the region where the power plant has been established. It's a JV between the World Bank Group, so IFC, but then we have a private company in it, the Electricité de France, and then a third of the company is then also owned by the Republic of Cameroon. So it's a good example about the joint venture between multilateral development banks helping to finance it, governments supporting project, and then the private sector. The project is actually operated on a build, own, operate, transfer model. It has a 35-year concession. After that, the project will be handed over to the Republic of Cameroon. It's very typical. I mean, it was a 1.4 billion project. 30% was equity financed, 75% was debt financed. Interesting, there were actually 12 multilateral development banks, DFIs, and commercial banks providing the finance. And the whole project was actually led by the World Bank Group. What was less known, however, was the role that insurance actually played to enable that project. So on one hand, MIGA and the IBRD actually provided political risk and payment insurance for the lender. So that was very important. However, Swiss Re was actually the lead insurer on that project. The overall cover was close to 600 million, and it included construction all risk cover, inherent defect insurance, then marine cover, general liability, and so on. So the point I wanted to make here is really very often that the role of insurance is actually underestimated. We very often work in the background of those projects. However, if projects can't be de-risked, they are not going to happen, because then the finance companies will not be able or willing to take certain risks. So insurance actually has a tremendous role in enabling projects. Now, when we speak about de-risking projects, we offer, or the industry offers, a lot of traditional cover, and the slide I put up here is really the cradle to cradle or cradle to grave approach. So in all phases of an infrastructure project, we actually provide certain insurance cover. What I like to talk about it a little bit more, though, is about the role of innovative risk transfer. And my colleague actually just talked about parametric insurance. What is important, and sometimes there are projects that have specific risks that are not or cannot be covered by traditional insurance. A good example is we're just working at the moment at the project right now where local markets are not willing to provide earthquake cover for a big construction project. So in this example, we actually can use a parametric quake cover to bridge that gap. So the traditional market can still provide the construction engineering cover on a traditional basis with the earthquake exclusion, and the earthquake cover can be bought separately on a parametric basis. More other innovative covers, for instance, are definitely anything that is weather related. I'll give you another example. For when you build a big wind farm, an offshore wind farm, you actually need certain equipment to do that. Most often you have to book well in advance these big ships that are able to lift these cranes and the blades. And one of the issues is that if the weather is bad, the ships can't go out. And normally such a construction ship costs around, I would say, between 120 and 200,000 US dollars per day. If you miss your window for the build phase, then you have to wait another year. And the issue really is how you deal with that. are investors actually taking that risk, or do they want to pass it on? And a solution, for example, is or was a wave cover we developed. So if the wave or the weather is too bad for the ships to be able to go out and erect these wind turbines, then insurance steps in and pays the money to make up for those losses. Now, in respect of conclusion, I want to point out a number of points. First of all, large infra projects actually require close cooperation between sponsors, government entities, multilateral development banks, as well as the private sector. Secondly, mobilizing private capital will be key in closing the infrastructure finance gap in the future. If you think about insurance, think about us as contingent capital, because if losses happen, project owners then either have to refinance the project, inject more equity, or raise debt, or they can tap into this contingent capital, which is called insurance. Now, to de-risk projects, you can actually use traditional covers, or you can also use into customized innovative solutions that address specific needs. And the last point I want to make is, please think about us to involve us early on in projects and not just as an afterthought. So very often we have a tremendous know-how, we have tremendous experience from past projects, and we really can help to enable infrastructure projects that face some challenges. So with that, Benita, I'd like to hand over to you.
Thank you very much, Christian Wettley, for another interesting piece, this time on the insurance company's role as a risk taker on de-risking infrastructure investments, essentially making them more bankable. So having better debt service ratios for those of you who are involved in financing out there, and making them more attractive to private investors. So unlocking that private capital to flow into those projects. Also talking about the role of the sector in incentivizing climate resilience projects, and an interesting example there, the Cameroon hydro project, which is a classic project finance deal where IFIs and MDBs co-finance a PPP project, but also highlighting Swiss Re's key role in providing insurance cover for construction risk at various other stages of the project. And finally, again, on innovative risk transfer, another mention for parametric insurance. Excellent points there to chew on. Now on to our discussant for reflections. I would like to invite Ms. Jane Romero from the Pacific Region Infrastructure Facility, or PRIF, or PRIF, to reflect on the presentation in the context of the Pacific, where there are some unique challenges to accessing affordable insurance. Jane is a technical assistance officer in the Pacific Region Infrastructure Facility, PRIF. She has an engineering and economics background and has worked in various aspects of infrastructure development in many countries in Asia and the Pacific for over 15 years. In her present role at PRIF, she prepares and implements technical assistance in energy, transport, urban and water sectors to help improve the quality and coverage of infrastructure in the Pacific. She also supports Pacific Island countries in developing their national infrastructure investment plans. Jane, the floor is yours.
Thank you, Benita, and greetings to everyone. And thank you for this opportunity to be part of this conversation on leveraging insurance for resilient infrastructure. I'll just share my screen. And so, can you see my slide?
Yes, we can. If you could please go to presentation mode, that would be great. We can't
Yes,
see you
yes.
on video, so if you could switch that on, that would be great.
I think my computer is just one trick pony. So it's either I share my screen or, but anyway, I'll just continue with with my presentation. So as Benita has mentioned, I work at the Pacific Region Infrastructure Facility. So PRIF is a multi-partner coordination and technical assistance facility. It was established in 2008 to help improve the quality and coverage of infrastructure in the Pacific. PRIF partners include the Asian Development Bank, Australia, European Investment Bank, the European Union, Japan, New Zealand, the US, and the World Bank Group. And as part of our coordination function, we facilitate 5 sector and 2 thematic working groups composed of project officers of various PRIF partners working in the Pacific. It was one of those working group meetings early this year when project officers from ADB, World Bank, and MFAT shared that some of the projects they were working on were experiencing delays because of difficulty in getting affordable insurance coverage. So we dug deeper and tried to understand what's going on. Was it just a procurement problem? Was it an isolated case, for example, for Tuvalu or for Tonga? And try to understand what was the general situation before. We asked also the views of contractors and insurers active in the Pacific. They said that in recent years, it had become difficult for them to get cyclone coverage and that they are paying higher insurance premiums. So in a nutshell, the challenges are caused by increasing catastrophic climate and other risk events, poor management of project risk as projects are becoming more complex, lack of competition in insurance market, and high expected disaster losses in Pacific countries. I think you'll have a better context of the constraints by looking at this map of the Pacific. And we are working in these small countries. So PRIF covers 13 Pacific Island countries plus PNG as associate member. Basically, infrastructure costs in the Pacific are high due to geographic remoteness, lack of in-country resources and capability, and typically small scale of projects. These factors, together with increasing climate change impacts, has led to increases in the cost and ease of securing insurance coverage for infrastructure projects. And indeed, the topic today is very timely and important for us. And while Christian's example in Cameroon is a mega project, it would be interesting to explore if the strategies mentioned can work also for relatively smaller projects. How can insurance help de-risk projects in the Pacific? Collectively, the infrastructure portfolio of PRIF partners in 2021 is about 1.5 billion, but is composed of 25 projects in various sectors, wherein 3/4 are less than 30 million in size. Can risk pooling be applied here? Or what does it mean to bring in the insurance industry early to help de-risk projects? How would this mechanism would look like? What are the elements to make it work? And to further, explore these questions, we are starting a new technical assistance, which aims to provide recommendations to improve the cost-effective management of infrastructure project cycle risk in the Pacific. Some of you may already have experience on this in pooling projects in city or state or provincial level. We are keen to learn from your experiences during the breakout sessions. And thank you very much. Over to you, Benita.
Excellent. Thank you very much, Jane, for sharing informative examples of challenges in access to affordable insurance in the Pacific at the project level. And also exploring, that's an interesting question, exploring the possibility of introducing risk pooling for these projects. I mean, due to sheer size of the Pacific Island countries compared with the larger countries and the larger projects in those countries. So very interesting discussions there. Thank you very much. We're now going to move into one of the 3 breakout rooms to continue the discussions with the presenters. You've met them, you know what they look like. So, feel free, be comfortable when having this discussion with them. we have the purpose of the breakout room is to share ideas, experiences, and to discuss the role the insurance sector can play, what is needed to create an enabling environment to leverage insurance for resilient infrastructure. And again, please feel free to share your views with our friendly experts. We have 3 breakout rooms. The first breakout room will focus on the value proposition of the insurance industry for quality infrastructure. The second will focus on public-private partnership, and the third on de-risking infrastructure investments. It would be great if in the breakout rooms you could turn on your cameras and join in the conversation. Please go ahead and click on the breakout room button on the bottom toolbar to open the breakout rooms list. You can then select the breakout room you want to join by clicking on the join button next to it. If you have any preference, if you don't have a preference, rather, or if you're facing technical challenges, we'll move you to a room. So basically we'll choose a room for you. We'll convene back here in 20 minutes. So that is about 3:20 to share some of the key takeaways. Okay, good luck, and we'll be back. We'll see you soon. Thank you. Hey, are we okay to start?
Okay, guys, we were cut off
Sure.
in mid discussion.
Yes.
Here.
Yeah.
There's a couple of technical issues, and one of them happened earlier on, where everybody was knocked off.
Yeah.
So we lost a lot of people. And anyway, sorry.
Apologies for that.
Not your fault.
I think
No, it's not.
I think the team were able to sort it out. Are we in the waiting room, or are we in the main room?
I think we might be in the main room.
Yes, we're in the main room, it looks like,
Okay.
because we were cut off from
Right,
our
okay.
discussion, and I see the number of participants is different.
Okay, excellent. So welcome back, everyone. I hope you enjoyed the opportunity to have more detailed discussions. I'd like to invite each of the moderators to share one main takeaway from the group discussions. Speakers, please try to stick to a 2-minute summary each. That would be much appreciated. We are running slightly over time. So we'll start with Ekoswehi on the value proposition of the insurance industry. Over to you.
Yeah, thank you, Benita. We were also cut off, but I think we got some points across, which is that there is value, I think, in what the insurance industry has to brings to the table. And I think that is fundamentally rooted in better risk management practices. And I think that this is an issue that is particularly relevant, as I mentioned earlier, at this time. And so part of what we discussed during the breakout was the value in terms of building a better picture, or helping governments or whatever counterpart we're dealing with build a better picture of the fundamental risks that they are faced with, because having that picture and some of the techniques that are so fundamental to the industry can contribute to that. And that is important, not only in terms of structuring the kinds of risk financing solutions that are needed, but just in informing better risk reduction and risk management practices. So I think that was probably the main takeaway from that session, even though it was very limited time. But I will again just emphasize that from an IDF perspective, there's quite a lot of information on our websites. The reports that was shared on the IDF Practical Guide to Insuring Public Assets. And I hope that this gives a flavor in terms of what it is that the insurance industry brings to the table, but importantly, the need for public-private collaboration as we think about climate change and some of the big risks that we have ahead of us or currently dealing with as well. So thank you, Benita and team.
Thank you very much, Ekoswehi, for that very concise summary and, quality over quantity. So I hope that the shortened time wasn't too much of an obstacle. Okay, next we'll go to Arun on public-private partnership for coral reef finance. Over to you, Arun.
Sure. Yeah, thanks, Benita. We had a pretty good discussion. Lots of things said, but the one kind of takeaway that you're asking us to focus on, particularly because it's insurance, and in our case, it's climate-linked parametric insurance, I think is to get stakeholders to understand and to look at this notion of blended hazards. It was broached by my colleague, Dr. Haile, during our discussion. So in some areas, it could be the one-off big time event like a Category 5 hurricane, but in other areas, it's a slow onset. It's a coral bleaching that gives, caused by sea level rise, warming temperatures, but that has a cascading effect on coastal erosion, et cetera, et cetera. And then there's the anthropogenic factor, is you have like we had in Tubataha, not only the typhoon risk, but that's combined with the cargo tankers, the oil tankers coming by, and sometimes they are swept onto the reef by heavy winds. And is that insurable? So that's the kind of quick takeaway, is really that I think we as a team at ADB need to start looking at this blended hazards and start talking to our stakeholders, particularly the insurance industry. Thank you.
Excellent points there, Arun. Yeah, no, it's interesting to see how blended hazards can be covered. So thank you very much for that, and I hope that the participants in your group found it insightful. We'll move on next to Christian for the takeaway on de-risking infrastructure investments. Over to you, Christian.
Thank you, Benita. I think same as the other breakout groups, we didn't have a lot of time, and I think it was a very interesting discussion. We discussed 4 areas. Firstly, what new technologies can be used in risk assessment. For instance, drones in respect of getting immediate footprints about evolving risk, for instance, floods that can be assessed, and then also have a much faster claims assessment afterwards. Secondly, we talked about removing barriers for insurance, and I think my pitch there was to really involve the insurance industry earlier on in project design. That actually brings me to the 4th point, which was in respect of what measures can be, or resilient measures can be introduced also to reduce risk premium. There we talked about risk engineering services. So for instance, having insurers on site make some recommendations about flood risk and how they can be mitigated. For instance, don't build critical infrastructure underground like transformers, build them somewhere safe, have flood barriers in place. And if these measures are then implemented, then per definition, the insurance premium will go down. We also talked about scaling up projects, especially how can we deal with smaller projects, how can we bundle them into facilities, or make them more standardized so we can actually look at it more on a portfolio basis rather than risk by risk basis. Very interesting discussion. I think we could probably go on for days or hours, but yeah. Hand over to you, Benita.
Thank you very much, Christian. And I have no doubt that the team members in your session were able to pick your brain as an industry insider on various solutions to the many problems. And like you say, if we had even 3 days, it wouldn't be enough. So thank you very much for summarizing that very well. Okay, I'd like to now bring the session to a close. Today's session has involved rich dialogue from seasoned experts and from the participants on various facets of the insurance industry and its role in leveraging insurance for resilient infrastructure. A lot of food for thought there. Allow me to thank our speakers again for sharing their work and moderating the breakout sessions. And thank you all, the participants, for your engagement throughout today's webinar. ADB will convene the next webinar on gender and resilient infrastructure. And this webinar will be held on Monday, the 4th of October at 2 p.m. Manila time. So please save the date. This will also be an interactive webinar, and we hope that you can join it. Further details and registration are available on our website. And also to note again that today's presentations and other resources, including a recording and summary, will be posted on the website shortly. I thank you very much again and have a wonderful day.